Next up was a pattern on crude. Next up was a wave pattern on crude. I'm sorry, I wanted to show you guys a snapshot here. Let me back up. Here's a snapshot of crude oil at about 11 o'clock here. Now, we had just finished taking these two winners at 10.19 and 10.22, and then what happened here today was we started seeing this price start to stair step its way through these highs. Well, 86.28 was the extreme high on my slower time frame, and what I wanted to really show you guys here was a couple things. First of all, the fast time frame here, you'll notice nothing's above me, right? Nothing above me. And then, of course, on the slow time frame, it confirms it. We've got nothing above me here. I'm trading at the extreme highs. Now, notice down bottom here, guys, look at momentum. Momentum, all choppy, right? Everything overbought, all choppy momentum. And then finally, look down bottom here. Look at how the pace of tape goes from very, very slow red, and then all of a sudden, bam, it jumps up to green. Now, this is all a very easy story to kind of interpret here. We're trading at the all-time highs for our purposes, right? The quarterly highs, which means we're not looking at anything above us to really give us any feedback, right? We can't see us bouncing off a level of resistance. So really at this point, we've got to look to the market for clues. The momentum indicator tells me overbought and very choppy, which means there's probably not a lot of real big money buying these highs right now. So our big concern is we don't want to be chasing the highs and get into a trade that's going to reverse and collapse and take us out for a stop. So with momentum being, of course, overbought like that and very choppy, if we're kind of fluttering up above that, in this case, all-time highs, be careful out there because it's going to very rarely give you that very clean signal to jump into this trade. So if you don't see anything above you, give it some time, wait to see what the rest of the market will bring us, wait to get a couple levels of overhead resistance, and then play within that bracket. This is a great example here on crude where we were kind of trading in no man's land, and we had to wait for the rest of the market to catch up to us on crude. Now, it certainly did because our next trade here, another big winner here, remember, we had just started to see these things start to creep up to this nowhere's land. So where we're at these all-time highs, what do you think I'm thinking about? I'm thinking about a two-step short, right? At these all-time highs, looking to short those highs. That, of course, we don't have any more conviction to the upside. All we have to work with is the feedback to the downside. So, of course, in this case, we're going to go back in, look at our high of day here. Short-term trend is up. You can tell that. Short-term trend is up. Here's your high of day. Going to provide all this overhead resistance here, pushing down at the highs here. All those sellers will be stepping in at the highs. High of day, we then look for our swing low, break below that swing low, and there's your two-step short, 1050. So right around the same time that crude is making these new highs here, we're looking to go short. Okay, don't get wrapped up in trying to chase after this thing for a breaker long, right? Don't get wrapped up in trying to chase this thing to the upside. Settle down, wait patiently, look for that swing low, and take the higher percentage trade on big sellers for this two-step short. 86.48 was the fill. We got our +4 filled. Stop moves to entry -1. Got our +8 filled. Now we start trailing our stop. In this case, we had red pace of a tape, right? Red pace of a tape. What does that mean? That means the discretionary exit. We used our we used our trade management chart, of course, for the discretionary exit. We saw the MACD. We saw momentum. And we saw red pace of a tape. Okay, so what that means is now's the time for us to get out of that trade. We got out of this trade literally at the very bottom of this move, 86.42, locked up +4, +8, +5, 21 ticks, or 210 USD. One of the most impressive things about this move, though, is this was a 17-tick range, 86.57 down to 86.40. That's a 17-tick trading range, and we pulled 21 ticks out of it, guys. That's what I'm talking about, right? That's a two-step pattern. Of course, dipped in gold right there, right? Two-step patterns, 21 ticks to finish up our day. As you guys can see, wonderful day here in the room. We weren't done though yet. We had one more trade here just before 11 o'clock. At this point, we had 95 ticks in our pocket. We were looking at potentially another wave pattern here. And on this wave pattern, another great example, guys, of where our rules tell us when to get in. Our rules tell us when to do nothing at all. And another great example of where our rules kept us out of this trade, guys. You can see here, just after 11 o'clock now, we started seeing things slow down. We already had 95 ticks, almost $1,000 in our pocket already this morning because of the price action we traded with. We saw the signal fire off down bottom here, right? Signal fires off down bottom. We end up jumping to the upside. Okay, I'm going to use this low here, 86.30 up to 86.90 for the high. That defines my zone. What happened was we came down through the zone, ended up testing our trigger line below that swing high. Okay, so of course we were in a slow day to begin with. Momentum curled early. So what happened was momentum at that point had just begun, right, had begun to curl up. By the time we had come down to test that 60 level there, momentum was already all the way about halfway up. So we, of course, expect the momentum then to curl and point back down again. That's exactly what happened. So momentum curled early, and we saw some very slow speed of the tape around the entry point here of 60 even. We decided to skip it. Didn't fit our rules. Was not that perfect 10 pattern. And as you guys can see, it blew right through our order there. Would have stopped you right out. Below the 54, it would have given back about 50 ticks there on that loss. So once again, it's not the trades we take that ensure our long-term success. It's those trades we avoid. Told them all up, guys. 95 ticks in the scalping method. Nothing on the wave method today. Kind of a low volume environment on the wave. So we'll wait for tomorrow. But as you guys can see, another big day here in the live trade room. Let's prep for tomorrow. We've got Tuesday, April 6, 2010. Tomorrow, not much going on except for that 2 o'clock FOMC meeting minutes. Want to make sure you guys are here for that tomorrow. FOMC meeting minutes at 2 o'clock. That means most of the morning tomorrow may be a little bit indecisive, waiting for the FOMC meeting minutes to be released. That'll be talking about certain things like interest rates, inflation, the overall stability of the economy, right? Global trade, all that type of stuff. So a lot of the big money will be waiting for 2 o'clock tomorrow. Those FOMC meeting minutes will give them a heads up on what to do the rest of the week. Of course, we'll also do the webinar tomorrow at 11:30. So a webinar tomorrow at 11:30. Don't want to miss that. And as always, guys, we'll be back here tomorrow morning, 7:45 a.m. Eastern Time, like we always do. Webinar tomorrow, Tuesdays and Thursdays. Webinars 11:30. If you guys want more information about our foundation of knowledge, our routine, our patterns, our entry rules, all that is covered in the beginner's course, everybody. And if you want more information about lifetime advanced membership, sales at schooloftrade.com. And don't forget, jump on Skype. They're at School of Trade Sales. Once again, my name is Joseph James. Hope the video helps. Happy Monday to you. We get a busy week ahead of us, guys. Lots of money to make in April. April, May, and June are always some of the biggest months of the year, so don't miss any more days in the trade room. We'll see you guys back here tomorrow morning, 7:45. Bye-bye for now.